curious about the upcoming tax laws for 2024? Well, you're not alone. Let's address some common questions. Question 1. How soon can I file my 2023 tax return? The answer is early January. Keep a keen eye on the IRS e-file opening updates. Question 2. What is the deadline for filing my tax return for 2023? The deadline is midnight, Monday, April 15, 2024, unless an extension is filed. Those residing in areas affected by natural disasters may also have a later deadline. Question 3. In 2023, what will be the standard deduction? The standard deduction, adjusted for inflation, rose to $13,850 for single taxpayers and married individuals filing separately. For married individuals filing jointly, it's $27,700. Heads of households will see a $1,400 increase to $20,800. Question 4. How will the tax law change in 2023 affect taxes? COVID relief tax benefits, such as the child tax credit, will revert to previous tax rules or expire in 2022, potentially resulting in lower refunds for taxpayers who've become used to higher refunds due to COVID relief. Let's explore some key tax benefits. Question 5. What are the child tax credit benefits for 2023? The COVID relief credit dropped from $3,600 to $2,000. Dependent children must be under 17 years old. The credit is refundable up to $1,600. No advance payments were made for tax year 2023. Single taxpayers or heads of household earning up to $200,000 or $400,000 for married filing jointly can claim the credit. Question 6. What about the child and dependent care credit for 2023? The provisions remain the same as before the American Rescue Plan. You can claim up to 35% of the first $3,000 of childcare expenses for a dependent child under 13, a spouse or parent who is incapacitated, or another dependent. If you have 2 or more dependents, a credit of 35% of $6,000 in expenses, or $2,100 is available. If your income exceeds $15,000, the credit will be reduced. Question 7. What is the Earned Income Tax Credit? The EITC is a tax break for low-income workers and families. For tax year 2023, this credit is worth up to $6,660 for a family of 3. Tax filers without children must be at least 25 years old and under 65 years old to claim the credit. Question 8. What about transactions involving payment cards and third-party networks? Form 1099-K. If you accept credit, debit, or prepaid cards or payments through third parties such as Venmo and PayPal, you may receive Form 1099-K. The American Rescue Plan of 2021 changed the reporting requirements for third-party payment processors. The new plan decreased the reporting threshold to payments over $600. With new tax provisions, extensions, and expansions of tax benefits related to energy efficiency, healthcare, and corporate taxes, the Inflation Reduction Act was signed into law in August 2022. The Inflation Reduction Act takes effect in 2023 in most cases. Purchases of residential energy-efficient property, such as solar panels and solar water heaters, between January 1, 2022 and December 31, 2032, will qualify for a 30% solar energy credit. The amount of the energy-efficient home improvement credit was increased from up to 10% to up to 30% of the cost of certain qualified energy-efficient improvements for the tax year 2023. A maximum of $1,200 for certain energy-efficient improvements and $2,000 for qualified heat pumps, biomass stoves, or biomass boilers can be claimed annually. The credit no longer has a lifetime dollar limit. With electric vehicles purchased beginning January 1, 2023, most of the changes under the Inflation Reduction Act will take effect. As of August 17, 2022, electric vehicles must receive final assembly in North America. This dollar-for-dollar credit can reduce taxes owed by up to $7,500. Starting in tax year 2023, you may be eligible for a tax credit if you purchase a used electric vehicle up to the lesser of $4,000 or 30%. It depends on your income, the price of the electric vehicle, whether it was assembled in North America, and whether you qualify for the tax credit. According to the U.S. Department of Education, Congress passed a law preventing further extensions to the student loan payment pause on June 14, 2023. As a result, student loan interest will resume starting on September 1, 2023, and payments will be due starting in October 2023. You can deduct student loan interest up to $2,500 from your taxes. For 2023, the maximum contribution limit for 401k plans increased to $22,500 and $30,000 if you are over 50. For traditional and Roth IRAs, the maximum contribution limit increased to $6,500, $7,500 if you are over 50. It is possible to deduct the contribution amount on your 2023 taxes, which you file in 2024, if you contribute to your IRA before the April deadline. In addition, you may be able to deduct contributions you made directly to your health savings account at tax time, up to $3,850 for self-only coverage and $7,750 for family coverage. The maximum contribution for 2023 is $3,050, and if you have an employer plan that allows carryover of unused amounts, the maximum carryover amount is $610.
One of the changes that could be of interest to you revolves around deductible mileage. If you drive for your business, remember to keep track of your mileage. For the tax year 2023, the business mileage rate is 65.5 cents per mile. If you had to drive to medical appointments, you could be eligible for a deduction of 22 cents per mile. And if you volunteered your time and drove for a recognized charity, your mileage expenses could be deducted at 14 cents per mile. Now, if you've added a new member to your family through adoption, there's something for you too. You could be eligible for tax credits of up to $15,950 for qualified adoption expenses in the year 2023. Here's something about gifting. The annual gift tax exclusion for the year 2023 is $17,000 or $34,000 if you're married. That's the amount you can give tax-free. Let's talk about unemployment benefits. If you received any such benefits, remember they're taxable. You should receive a 1099-G reporting these benefits. If you're self-employed, you can claim various deductions, including those for business travel mileage and home office expenses. However, if you're working from home for an employer, you won't be able to claim a deduction for home expenses. If you've diversified your income sources, keep an eye out for different tax forms. You'll receive a 1099-G for unemployment benefits, a 1099 DV or 1099 INT for dividends or interest over $10, a 1099 NEC for self-employment income, a 1099 MISC for rental or other income, and others for income through various payment platforms, health savings account distributions, and retirement plan distributions. If you sold stock, you'll receive a 1099-B. And of course, if you earned wages, you'll get your employer's W-2. So there you have it. Key changes to tax laws for the upcoming year. Remember, understanding these changes can help you plan better and possibly save on your taxes. After all, knowledge is power. And in this case, it might just be the power to keep more of your hard-earned money in your pocket.
Thank you for watching. If you want to learn how thousands of US taxpayers have learned to legally reduce their taxes each year, sign up for the channel's tax course on Udemy, IRS Schedule C for freelancers and small business owners. This includes home-based businesses as well. Happy holidays.